Good morning and welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. A mixed picture when it comes to the global markets. Wall Street had a mixed close on the back of weak employment data. It was sharply lower than expectations. At a two-year low, that was the private payroll data. And there was a fair bit of disappointment on that front, which is why the Dow snapped out of a 4-day gaining streak. Asian markets were fairly mixed this morning. GIFT Nifty was mildly higher, but for our markets in the pre-open session, we can see a good 60 or 70 odd point up move on the index. So we could expect an open rather around that 24,650 to 24,700 mark. Aside of that, you also have the RBI monetary policy, the MPC meeting that's underway. It's day 2 of that meeting. Tomorrow is when we get to know what the decision is around 10 a.m. when the governor will announce the decision via his speech. So yes, banks, realty, autos, they will be in focus, the rate sensitive basket, so to say. Also the likes of Gland Pharma, there's some negative news flow around this stock, so that will be in focus. Railway stocks were buzzing yesterday. We'll have to see whether the momentum continues today as well or not. And of course, lots of high flyers, stocks in focus. We will be taking stock of all of them. We'll also discuss all your stock related queries with our experts on the show, so keep them flowing in on our live feed. We will try and get them addressed. But before we go any further, quickly take a look at the top stories at this hour. Wall Street ends mixed after private sector payrolls data comes in at a 2-year low. The Dow snaps a 4-day winning streak while the S&P and Nasdaq end in the green with modest gains. Meanwhile, Trump once again calls on Jerome Powell to cut interest rates. Asian markets open mixed as weak private sector hiring in the US dents investor sentiment. The GIFT Nifty is indicating a mildly higher start and we are seeing a green tick in the pre-open as well. Crude oil prices slip as Saudi Arabia signals it may push for a large production increase, raising fears of a global oversupply. Meanwhile, gold prices rise, supported by a softer dollar and weak US data. And Royal Challengers Bengaluru's IPL victory celebrations take a tragic turn. 11 people have lost their lives and several injured in a stampede outside the Chinnaswamy Stadium. Facing flack over crowd mismanagement, the state government apologizes. All right, taking a look at the cues for trade then, very quickly, a wrap of what happened yesterday. We saw a higher close. In a range-bound session, the Nifty ended above that 24,600 mark. We snapped out of a 3-day losing streak. Broader markets continued to outperform. Mid-cap index ended high by 0.8%. India VIX cooled off further 4% or so. So, that's something that, supported sentiment when it comes to the market. The Nifty Bank Index continues to consolidate. It did hit a fresh record high in the previous session, but it has turned range bound ever since. QSR stocks saw a big move. Swiggy, surged somewhere around 9%. Eternal surged more than 3%. That was the top Nifty gainer. You also had, defense stocks, railway stocks, shipbuilding stocks. They were, flying high in trade yesterday. And when it comes to the flows picture, foreign investors turned buyers once again yesterday. They bought shares worth 1,000 crore rupees in the cash market. Domestic investors were buyers to the tune of 2,500 crore rupees in the cash market. And when you talk about the put call ratio, that rose to 0.73 from 0.65 in the previous session. Manappuram Finance remains in the F&O ban, but there is a new entrant, Aditya Birla Fashion. That stock will be in F&O ban today. The stock hit a 52-week low. There was a block deal in the counter. The stock was down somewhere around 10% or thereabouts in yesterday's session. But let's talk about the technical setup, how we are poised, whether we are looking at breaking out of the range that the market has been trading in the last few sessions. To take stock of all that, we have Chandan Taparia of Motilal Oswal. Chandan, lovely to have you on the show. I just want to say that we are, of course, stuck in a range, a narrow trading range, 25,116 on the upside to 24,462 on the downside for the past 16 sessions. So we've spent a lot of time in this range. There has been a phase of consolidation, indecisiveness among market participants as to which way the markets would head. But going forward, do you see any directional move, or do you expect this range to continue for the next couple of weeks?
Good morning. Thanks for having me. So I believe the trading range could continue. The index got stuck in a range of 500 points and declines are being bought, but at the same time, the follow-up is missing at higher levels. For most part of the last 2 weeks, the market was finding tough to hold because of the sustained call writing at 25,000 marks. But now supports are intact, but follow-up is missing because selective heavyweights stocks are witnessing some profit booking. Mainly the heavyweights banking counter got stuck in a broader range. So major trend is positive, but some consolidative move is required because already we have seen a good run up in the month of April and May, and June needs to consolidate to commence the next leg of rally at the beginning of the July or towards the end of the May month. So I believe market requires a consolidative phase, and already it has been doing from last 15-16 days. The broader view is that till it holds about 24,442, immediate trend could be positive to range bound. If that level is broken, then I believe the immediate structure could be negative because we are moving in a range of 24,462 to 25,062 marks. So as of now, I'll closely watch 24,442 as an immediate level. If market manages to hold above the same, then recovery may be seen towards 24,850 to 25,000. But let me be very clear that upside also is likely to be kept. So we are in a different scenario where selective sector and stocks are doing well, where indices got stuck in a broader range as market require some time correction rather than talking about the price correction at current scenario.
Okay, that's the view then. But some stocks I want to get in your thoughts on, particularly a Spark. Yesterday it was down 20% on the back of a failed drug trial. But with this move, is there a fresh breakdown on charts? And how would you look at the stock structure going forward?
So, Nandita, we are not much positive on the pharma counter. Glenmark is the only stock which has given a bottom out approach and consolidation breakout on the daily and the weekly scale. Sun Pharma and Spark has seen a corrective move. However, in the last week, it witnessed a decent run up from 160 to 200 marks, but the bounce was being sold totally, and stock has seen a corrective move by negating its positive price pattern. So, I believe the structure has totally changed, and because of that, more profit booking could be seen. On the downside, stock has potential to retest the key support of 145 to 148 levels, while as of now, till it remains below 168, bounce could be kept and selling pressure could be seen in the counter.
Okay, that's the view then on some of these pharma names. But Chandan, before just about 3 minutes to go for the markets to open, I would like to know your stock recommendations first for our viewers for the day, or maybe with a time horizon of 1 to 2, 3 days.
Yeah, so thanks for asking. And trust me, this market will reward more on the selective sector and theme and the stock specific approach. Two, three sector I want to highlight here. First is the defense name. We are quite positive on the defense counter, and most of the counters have really done well. However, now we are witnessing some consolidative move, but selective defense counter or the shipping counter could be on radar. However, GRSC has rallied well by more than 100% in this year in last 5 months, but still trend is positive, and I believe that till it holds about 3200 levels, the stock has potential to rally towards 3550 to 3600 level. So GRSC will be on radar, and apart from that, one can also focus on the counter like BEML, which has given a consolidation breakout on the daily chart. So with support of 40 to 80, it can head towards 55, 45, 50 kind of level. So GRSC and BML will be two preferred idea in the defense theme. Apart from that, we have positive stance on the capital market theme, BSE, CDSL. Most of these counters have really rallied well. So one can look at the name. BSE as of now is support at 2720. It can head towards 2880 kind of level. One more stock I want to discuss here is about SBI card. Here we have seen a major consolidation breakout on the daily and the monthly chart. Momentum looks quite promising, and with support of 920, it can head towards 980. So these are the selective ideas from the financials, capital market, and the defense space one can keep on radar for the day.
Yeah, renewed momentum when it comes to all these defense and shipbuilding stocks. Stocks like GRSE have been on a tear, so to say. But just about a few seconds to go for the markets to open. We have the RBI policy tomorrow. Anything from the banking pack that is catching your attention and is worth a trade?
So the entire bank nifty is getting the attention as we are heading towards an important RBI policy where most of the people are expecting some relief in the interest rate given the growth scenario of the country. So if Bank Nifty manages to hold 55,500, I believe it can start the next leg of rally towards 56,161 to 56,500. So positive stance on the Bank Nifty as a whole. Federal Bank looks quite promising. With support of 206, it can head towards 218 marks.
Okay, Federal Bank looking attractive from the banking lot. But first ticks are coming in, and it is positive as was being expected. A 38 to 40 point uptick on the Nifty. It's at the 24,616 mark. The sensex is up by 100 points or so. The mid cap index, continuing to show strength. A 200 point up move on the Nifty mid cap index. It's up by 0.4% or thereabouts. Advance decline ratio as of now looking very strong. 1270 advances to 314 declines. So right now, of course, at the start, it's a little early to really predict as to whether or not it will hold or not, but for now it's looking strong. The Nifty Bank Index has started off with a positive bias, 55,740 or thereabouts. That's where it's at. In terms of other sectors, I want to see what the IT and metal baskets are doing at the current juncture. Yesterday they were among the gainers. And of course, we had the higher steel tariff also kicking in yesterday. Despite that, we saw a 0.6% kind of an up move on the metal pack today as well. In fact, all the sectors are trading in the green as we speak. Metal pack is up 0.2%. Pharma is showing strength today, 0.5% up move there. Media pack is doing okay. It's up 0.5%. Realty pack yesterday, saw some profit booking. Is back up on its feet, 0.6% kind of gain on the real estate pack as well. All in all, it's a good start. All the sectors at the current juncture trading in the green. Just want to see what the India VIX index is doing. It's it's edging higher at the current juncture, up 0.5% or thereabouts, but still under that 16 level. In terms of movers, then let's take a look at which are the stocks that are taking the lead. From the pharma pack, Dr. Reddy's. That's the top mover, 3% gain there. Eternal extending its gains. Yesterday, Eternal was the top Nifty gainer. Today, another 1.5% gain. Shriram Finance, Cipla, Power Grid. Trent was a laggard, by the way, yesterday. Today, it is recovering. M&M, Reliance Industries also among gainers. There's a positive brokerage note on this counter. The stock is up. Adani Ports, IndusInd Bank, TCS are some of the other movers. On the flip side, what's not doing well, is the FMCG stocks. Tata Consumer, that's the top Nifty laggard. No big cut, but it's down 0.8%. Titan is down 0.5%. Axis Bank, Nestle, Bajaj Finance, SBI Life, HUL, JSW Tata Steel. So some of the FMCG metal names among laggards, and so are names like Tata Motors and Eicher Motors from the auto pack that are not trading, in fact, trading with cuts as of now. But talking about the likes of an Eternal and Swiggy, they are seeing an uptick. Yesterday, both the stocks were up and about, and in recent times, Swiggy has seen some bit of an up move. How would you look at these two stocks?
Let me first comment on the Eternal. We are quite positive in the counter, and it took support at 200, and the next higher base was made at 220 marks. 242, 245 used to be a key hurdle that is being surpassed decisively. So I believe Eternal is all set to start the next leg of rally. One should buy with support of 242. This time, this counter can head towards 265 to 267 marks. So quite positive on Eternal as of now. Swiggy has bottomed out on the lower time frame as well as the bigger time frame. It has bottomed out, and we have seen a major bullish crossover after a span of almost 100 trading session. It surpasses 50-day exponential moving average, has been making high top, high bottom, and given a consolidation breakout on the daily and the weekly chart after almost consolidative move of 15, 16 weeks. So I believe Swiggy could be in action with support of 350. We are expecting a run up towards 375 to 378 in the counter. So quite positive on both the name. In fact, expecting a positional spurt in the Eternal to the tune of 15 to 20% from current level if someone is ready to hold for next 3 to 6 months.
Okay, next leg of rally starting in some of these quick commerce names like Swiggy and Eternal. In fact, we had a query on Swiggy on our feed from Naveen. Naveen, I hope you've taken note of the levels that Chandan just mentioned, and I hope it answers your query. But before we take up more queries, I want to get your thoughts on a Gland Pharma. Overall, you said you are positive on the pharma space, but with respect to Gland Pharma, some bit of negative news flow. Senexi manufacturing unit has got 11 observations from the French regulator. In fact, the regulator inspected the facility back in December 2024. The company has said that Senexi has already taken corrective and preventive action plan, the action plan in fact has been accepted by the French regulator, and there will be no disruption in manufacturing operations due to this inspection report. And of course, the company is committed to working closely with the French regulator. The stock is trading with a negative bias, no big cuts. As of now, the street has digested the news well, but in the last 1 month, we've seen a 14% kind of a move on shares of Gland Pharma. Even last 5 days have been fairly okayish. At 1614, would you expect higher levels here on? Perhaps the 1650, 1700 kind of levels in the coming days?
Yeah, so like when you ask about the pharma counter, I gave the positive on the Glenmark. So if I have to pick one trade, that will be Glenmark, which has given a consolidation breakout. But here to reply on Gland Pharma, I believe some sort of consolidative move is visible in the counter. As of now, we have noticed that supports are slightly inching upwards, and the stock has been making higher top, higher bottom from last almost 5 weeks. We have seen a decisive breakout above 1600 marks, and if it manages to hold above the same, I believe declines could be both. So buy this counter around 1600 with support of 1572 and look for an upside target towards 1660. So expecting some buy on decline stance in the Gland Pharma, but more positive on the counter like Glenmark Pharma in the pharma space.
Okay, of course, Glenmark was the pick from the pharma space, but those are the levels for Gland Pharma also. I beg your pardon. The next stock is Diamond Power. The stock is down 4%. Of course, there's some OFS news with respect to Diamond Power. Monarch Infra Parks and GESA, they will be selling up to 6% stake in the company via an offer for sale. The base issue would be of 4% stake, and the green shoe option of with a green shoe option of somewhere around 2% or so. The floor price for the offer is at 95 rupees per share. Of course, the OFS opens for non-retail investors today and for retail investors tomorrow. It's managing to hold on to that 100 level right now, Chandan, but it hasn't had a very good run over the last 5 sessions. Can it hold on to this 100 level, or would the support level be a little lower than that?
So if I look at the diamond cable or diamond power, in the last year the stock has really rallied well from 16 to 190 marks. But last 4 months are quite consolidative, and before that, from December 2024 to March 2025, it has seen a corrective move from 183 to 80 marks. Supports are intact, but momentum is missing. The good part is that multiple support are visible near 100 levels, which could provide some psychological cushion to the counter, but not expecting bigger or the wider move in the counter. As of now, closely watch 100 as a key level, and if it manages to hold, then some recovery could be seen towards 108, 109. So we are looking for the tech check with support zone, but trend is mixed as of now.
Okay, trend is mixed, and 103 level would be a level to watch out for on a diamond power. But let's shift focus to some other viewer queries then. I had spotted a query on Vari Energies coming in from Paddy, wanted to know whether we can invest in the stock at this price, or is there any other energy stock that we should look at right now? Your thoughts? Is Vari Energies worth a look now?
Yeah, so Wari is quite interesting stock. In fact, the sector has really done well, and the listing was quite amazing here. Uh, it has been consolidating in a range from last almost 6 to 8 weeks, but supports are intact. If I look at the price behavior of last couple of months, it made the bottom near 1863 and then headed towards 3100 level. But now it got stuck in a range from last almost 4 to 5 weeks. But supports are intact. 2700 or 2750 could act as a major support. And with those support, I believe on positional point of view, 3100 to 3150 kind of level could be seen in the counter like worry.
Okay, that's about a worry, but let's shift focus to another query then. This one's coming in from Alex on a JSW Energy. Wants to know whether it warrants a fresh entry for the long term. The stock on a 6-month basis has given negative returns in excess of 20%. But if you look at the charts from February onwards, you'll see that it has given a 17% kind of an up move. So at this level, at 500 odd, would you look at a fresh entry, because 52-week highs are still a distance away at 800 or so. So does that say that the stock could in fact retest those levels at least in the next 5 to 6 months?
Yeah, so JSW Energy is an interesting stock now in terms of better risk reward ratio. In last almost 9 to 10 months, it has seen a corrective move from 800 to 420 marks and now has been consolidating in a range from last almost 4 months. The good part is that the stock is in process to complete a rounding formation or cup and handle pattern, which is a bullish implication. 3 days back, it took support at 485 and now started to form higher top side bottom. Even in this week, it has seen a recovery after the consolidative or corrective move of last 2 weeks. So bottom process with better risk reward ratio can give the positive stance to the counter. I believe 500 can be used as a support, and as per the price setup, it can head towards almost 527 to 530 marks.
Okay, that's the view on a JSW Energy. Hope that answers your query. Let's take up a query on IEX next. Deepu Jayan has written in, wants to know your views on this particular stock, IEX, and wants to know how it's poised in the short term on the charts. The stock has been fairly sideways. I think after a good up move, it has been in a consolidation phase, so to say. Short term, how is it looking like?
So if I look at the IEX has been moving upwards, but the momentum is quite slow in the counter. If you look at the last almost 4 weeks, slow and steady, it has seen a surge in price from 192 to 204 marks. The beta of the counter has gone lower with better margin of safety. So expecting positive stance in the counter, but momentum is quite slow. I believe 199 can be used as a support, and slow and steady it can head towards 210 kind of levels.
Okay, 210, that's the kind of level to watch out for on an IEX. There's a query on this stock called NAVA. It's coming from Anil. That stock was rallying yesterday, I think 10% or so. And if you look at the last 1 month chart, because of yesterday's move, the stock is up 16% or so. If you track this stock, NAVA, how would you trade into this counter? It's around 534 or so now. 120 odd rupees away from its 52-week highs. Any structure here? Is this a momentum stock? Should one ride this momentum?
So I'm not closely tracking this counter, but yes, if I look at the recent price setup, support-based buying is visible in the stock as of now. 520 is an immediate support for intraday swing trading. With that support, I believe it can head towards 550, 555 levels.
Okay, that's the view on NAVA, Anil. I hope that answers your query. One stock from the real estate space then, Macrotech, Lodha. We have a query on that from Komal Makecha. Wants your thoughts on the stock, whether one should invest for the next 6 months to 1 year. Wants to know the target and stop loss on a Macrotech.
Yeah.
Thoughts?
Yeah, so Loda has really done well. In fact, in this year, it has seen a decline to 1035 and now managed to recover towards 1450 levels. It has been making a high top side bottom on the weekly chart as well. And I believe a couple of triggers could keep the prices on the higher note. First, upcoming RBI policy, and if we see any stance of the rate cut, that will clearly positive for the rate sensitive and most of the real estate counter. Last week, the data came for the luxury property in Mumbai, and that also a positive trigger for companies who are based out of Maharashtra. So I think multiple reasons are there for the real estate and the Maharashtra real estate related companies. So I believe one can hold the position, and especially when someone is looking for slightly medium term outlook for next couple of months to quarter, then I believe one should hold. As of now, one should use the support near 1250, and with that support I believe the stock has potential to really towards 1650 to 2000 marks. So for trading as well as the investment point of view, one can look for buying on the LODA and selective real estate counter in given market scenario.
Okay, that's the view on a Lodha. Hope that answers your query. Let's quickly squeeze in as many queries as we can. There's one query on Vedanta from Jaskaran Bajwa, holding at an average price of 444. Wants to know, should I book loss or wait? Although the stock has given positive returns on a monthly basis, last 5 days hasn't been great for the stock, and this gentleman here is making a bit of a loss. Should he hold on or should he look at booking losses? How should he trade?
So Vedanta has got stuck in a range from almost last 5 to 6 months. Multiple supports are visible near 363, 380 marks, but at the same time, 460 to 480 provides a key supply zone. It is a quite volatile name because earlier it has seen a corrective move from 475 to 363. Recently, it has recovered well from 363 to 457 and now hovering near its 50-day exponential moving averages. So I believe the mixed set of cues could be there. If he's ready to hold for slightly longer time frame, then I believe one can hold. With support of 425, Vedanta has potential to rally towards 455 to 460 marks.
Okay, that's the view, and 455, 460, those are the higher levels to watch out for on a Vedanta. The next query is on a Voltas from Pannu Anil. Wants to know your thoughts on this stock. The stock has been stuck in a downtrend around that 1200 mark, 1230 mark right now. Would you expect more weakness on the charts?
So, like this time, the weather forecast or the IMD forecast uh, has been quite prominent as rain or the monsoon came early, and I believe that is the key trigger for agri and the fertilizer and setback for selective consumer durables name including Voltas. The stock has been making lower top, lower bottom from last 2 3 days and failed to surpass the multiple barrier at 1280 marks. In fact, the major trend is mixed. Even the medium term trend is negative as every meaningful bounce is being sold. So expecting further weakness in the counter. As of now, till it holds below 1255, it can go down to 1190, 1185. So the structure for the counter is weak, and I don't think there will be any follow-up buying. In fact, the bounce could be sold here as well.
Okay, structure is looking weak on a Voltas. Uh, there's a query that has come in on Bajaj Twins, Bajaj Finserv and Bajaj Finance. Debu K wants to know about Bajaj Finserv, and Varsha Gajjar wants to know your thoughts on a Bajaj Finance. Bajaj Finserv, I was just going through the chart. It's been consolidating. If you look at the last 1 month chart, would it remain in this range, or do you see any change in the chart structure? Because the last 6 months the stock has done fairly well. And how are you looking at Bajaj Finance as well? These two stocks, if somebody has positions, how should they navigate?
So first to comment on Bajaj Finserv, the stock is up by around 22%, 23% on YTD basis, has been making art top side bottom, but of late in last almost 5 to 6 weeks, it has got stuck in a range. If I look at the price behavior of the entire May month, it took multiple support at 1950, 1960, but sustained supply was clearly visible at 2070 marks. Even on the last trading session, it gave a small breakdown on the lower daily time frame and drifted well below its 50-day exponential moving average. If I look at the data setup, clearly the buildup of shorts with sustained call writing is being marked in the counter, and because of that, some profit booking could be there. So I believe one should avoid as of now. With hurdle at 2000, one can look for a downside target towards 1880 in Bajaj Finance. Now to comment on Bajaj Finance, again the same sort of stories here, because both the counters are having same sort of the pair trading or same sort of probability scenario as well. Only the good part is that stock is holding well above its 50-day exponential moving average from last 105 trading session. But the structure of the counter has got post upside is being kept. It has given a consolidation breakdown on the lower time frame or holding well below 9030 marks. So till it remains below 9030, I believe this heavyweights counter from the financial pack has potential to drip down towards 8700 levels.
Okay, both the stocks are drifting down, and of course, lower levels being predicted on these stocks. With that, would like to thank you, Chandan. We've come to the end of the query segment, and of course, the chart checks as well. Would like to thank you for taking out time and joining in this morning. Always a pleasure, and hope to connect sometime soon.
Thank you so much. Have a great time.
Thank you. Well, on that note, let's just quickly take a look at what the markets are doing. In fact, they have kind of picked up pace after a muted open. We are seeing a 120 point kind of an up move on the index. We have reclaimed that 24,700 mark on the upside, around that 24,750 mark as we speak. The sensex is up almost 400 points, and the mid cap index, in fact, has started trailing the benchmarks, so to say, at the current juncture. But on that note, let me bring on board our next guest for today, big market voice, Ajay Bagga, joining in after a long time. Ajay, lovely chatting with you. We've, last we spoke, that was before the tensions with Pakistan, so a lot has happened. We have recovered lost ground as well. Markets have climbed all the walls of worry in a very smart way. Although we've turned range bound, it's seriously not a bad place to be, right? Because we're just about 5 to 6% away from record levels. So what's the road ahead looking like? Because we've been stuck in a 500 point range for almost 15-16 sessions now. Where are you looking towards when it comes to the market? Are we heading higher? And secondly, would you be worried in terms of valuations once again?
No, valuations, I'm not so worried, Nandita. If you see, year to date, we have seen outflows of about $9.9 billion from India in terms of FPI outflows. May we turned around, May we were the second most favored market after Taiwan. And Taiwan was more technical. They lost about $10 billion YTD, and they saw about 7 billion coming in May because of the semiconductors and AI theme coming back globally. So if you keep that aside, we were the most favored emerging market in May. So when this turns, and I think it's starting to turn, it's a large ship, so it takes time to turn. But when the FIIs turn, India will get its fair share of about 15 to 20% of the flows. That's our broad thesis. Second big thesis is, why are the markets range bound? Look at what's happening to global sentiment. So it's once in a generation, US exceptionalism is slowly moving out. You can't say it's collapsing because it's just so large. There is $33 trillion of global funds invested in US stocks and bonds. That will take time. What are the institutional investors doing? They are sitting it out in money market funds. So US money markets have gone up from $5 trillion of AUMs to $7.4 trillion of AUM. So incremental money is being parked in short dated treasuries or money markets, waiting out for the Trump policy chaos to settle down. So there is this huge move. There is a Trump tariff which till July 9th we won't have much clarity. But on the other hand, it could be a Trump Xi Jinping call over the weekend, and they could announce a truce. So markets can't go short. They're too afraid to go long. US exceptionalism is ending. Magnificent Seven have had a great run. There is basically no alternative for investors. they are again crowding that trade. Nvidia again became the most valued company day before. It overtook Microsoft again. So crowded trades, very fearful trades, and positioning which is very conservative, which is anything but US in its thinking, but not having the courage to move out of US and move substantial amounts into Europe, Japan, or emerging markets. That will happen. That will take time. But when it happens, India will be a big beneficiary. So, not very worried about the valuations that we will catch up. There's a lot of good work happening. Tomorrow, RBI should cut rates. Again, that will be a big boost into the economy, though with a lagged effect. Fiscal position very good, inflation good. So we are ticking all the boxes domestically. It's a global sentiment which is causing these range-bound markets. And once that gets resolved, or at least that doesn't look as bad, you will see FIs returning, and that will give a double-barreled gun to the market.
Sure, point taken. But you alluded to the RBI policy tomorrow. 25 basis point is being penciled in. That's the consensus. But is there an outside chance or a case for a 50 basis point, and how much of a probability do you see of that happening, given the fact that we have inflation comfort, sub 3.5% now, and growth-wise as well. If you look at the full year growth, 6.5%, and some brokerages have also scaled it down to 6.2%. So, is there a case building for a 50 basis point tomorrow itself, or would that be more staggered? And for FY26, what is the quantum of rate cut you're looking at?
Yeah. The SBI economist who seems to be a very well informed person has put out a 50 basis point. So I would say that will be a little bit of overkill. Yes, RBI was behind the curve. But come December, what they have done, 8 lakh crores of liquidity has been injected. Markets are having good liquidity. The RBI dividend will flow back into the markets via the treasury accounts by July. So that 2.69 lakh crores will start getting spent by the government, and that will come back into the market. So liquidity, we are okay. Macro-prudential measures, they have eased on, and most of them they are postponed to next year, and we are expecting more dilution. We don't expect that hard or harsh macro-prudential measures. Third, on the rates, where are we? We've had two consecutive rate cuts in February and April. One more tomorrow, one more in August is what we are penciling in. But tomorrow, do they do 50? I don't think so. I think they'll wait and watch. Too much happening globally, too much happening with China, for example. They will like to keep it in a very calibrated manner, then give a shock into the markets of a 50 basis points. I think that would be the only reason. Logically, you have the monetary space to cut 50. So if the SBI surmise is correct, we'll get 50. My thinking is 25 is enough for now. Let the previous rate cuts flow through the economy. It takes about 9 to 12 months for rate cuts to come through into the economy. We have credit which is a little constrained, but that's more a demand issue than banking credit supply issue. And there you can always tinker with the SLR or whenever you want to. So you don't really need to cut the rate right away. So I think RBI will be in a cautious mood, will not really move right ahead with 50. But let's see how much is left. Second part of your question, I think 50 to 75 basis points, including tomorrow, is left. So 50 is done. We are at 6%. We will probably end at 5.5 to 5.25. I would vote for 5.25, but in a calibrated manner. So you get June, you get August, and one more probably in October policy.
Okay, cumulative 75, so 5.25 to 5.5%, that's where the rates could be in this fiscal. But how would you really play the banking names in the wake of a rate cutting or in the middle of a rate cutting environment? Because NIM pressure was there and it will be there as RBI cuts more rates. Do you think mid-sized banks are better placed? Look are better placed, or whether one should look at mid-sized banks vis-a-vis large cap banks because of this?
I would say I would stick with the large cap banks because you will get the bulk there. So bank margins will go down. Their NIMs are down about 10 basis points. 5 more basis point impact will come in because all the MIBOR and MCLR, ECLR linked loans will reset almost immediately. Deposits will take time. But banks have been preparing for this. So treasuries will also gain. They are positioned so that the yield curve falls will help in terms of treasury gains. Secondly, they have been taking deposits on the lower tenure side. So those will get repriced pretty soon. So I would say another 5 basis point impact on the banking sector. But the big news is the credit will go up. So the 1 or 2% increase in credit offtake will more than make up for any margin losses. So in terms of absolute NIMs, banks will do well. And I would stick with the larger private sector banks and the larger public sector banks. In the mid-tier banks, yes, there has been some amount of re-rating happening on news flow, either getting taken over by stronger hands, foreign hands coming in from the Gulf or Japan. Those kind of news flows are there. Or on the public sector banks, the turnaround stories. Overall, if you look at banking, from about 30,000 crores of profits in 2014-15, we have come to about 3,71,000 crores this financial year, FY 2025, which is finished. So banks are throwing off a lot of cash. 3,71,000 crores of profits is nothing to frown about, and it gives them a lot of leeway to retain those earnings and add to their capital buffers. So we are in a sweet spot where NPAs have been cleaned out. Companies are not highly leveraged. We have seen the household leverage also going down over the last year. So all the RBI clampdown on the unsecured lending has helped, where the household leverage also has gone down as per the latest RBI annual report. So there is capacity in the economy to expand and to borrow more. Corporates have the capacity to borrow more. They're well capitalized. And banks have low NPAs, ability to lend with high capital ratios, so and with high profitability. So if that gets hit by about 5 basis points, that's not that big a calamity, because we are expecting the credit growth to jump to 12 to 13%, and that will help in terms of absolute numbers. So banks remain the top sectoral pick, and within that, I would say the large cap banks.
Okay, all right. I think there's another issue that has been, gaining a lot of, or that's being talked about quite widely. That's the rare earth magnet curbs by China, export curbs, and this is becoming a huge issue for the auto sector. EV production will be hit. Corporates have voiced their concerns as well. In fact, Siam has also written to the government as to how EV production could come to a standstill. How big a jolt would this be for global supply chains, and particularly India's EV drive? Do you expect a resolution? What are the alternatives? How should the auto sector really navigate this big issue?
Yeah, it's a global issue because in terms of the rare earths and magnets, China has a 90% stranglehold. And that's why Trump is desperate for the call with Xi Jinping. He's overplayed his hand, and the Chinese are not in a mood to relent. So you would have seen Bajaj Auto earnings call also. Rajiv Bajaj said that by July they are out of magnets and EV production will have to stop. US is recycling a lot. India doesn't have a base to recycle. So we are totally dependent on Chinese supplies. The global supplies are not there. and even for new supplies to come in, will take a couple of years. So it remains a very big issue. And I would stay away from the EV players till this is resolved. However, if Trump gives some concessions, it's one handshake away, and you could see that coming back. The lesson learned is there that you can't depend on China, as we saw in the COVID time, where the entire global supply chains were upended, more because Chinese supply couldn't come in. And then we have seen China weaponize its stranglehold in various commodities as and when it wants to do that. So I think on a broader brush, the government needs to bring in a very emergency kind of package for developing rare earths, rare minerals within India. We have the deposits in North India and as well as in Northeast. But it takes a long time, so probably give subsidies to somebody like Coal India or one of the domestic miners, government-owned miners, to avoid controversy, and invite in a global one of the big three global firms to do a JV and give them huge subsidies so that we can really kickstart it. Still, it will take a couple of years. So you're dependent on China till then, and they can choke the global industry. It's not only India, even the US industry is very worried. The European EV industry is very worried because there is just no alternate supply. The 10%, like Congo and all, they are now trying to develop, very difficult geographically, sitting in the center of Africa. You can make the mine, then you have to process it. Nearly 100% of the processing facility is only in China. So you can get the rare earth out of the earth, but how to process it, how to refine it, and then reach it to end consumers on an economic basis. I think those are the big questions, and we don't have easy answers. So the world will have to bow down to China and give it concessions to ensure that this supply keeps on happening.
Okay, that's a big threat then to the global supply chain of rare earth magnets from China. Let's see how that really pans out. But last question, really, Ajay. Defense stocks are back with a vengeance, especially after the India-Pakistan issue. Some companies disappointed with the earnings if you look at the Q4 numbers, but does it really make sense to ride this momentum in the shares? Because execution could be an issue going forward. So would you advise a sharper focus on execution here on, and avoid getting into the frenzy that we have seen in the stocks post the geopolitical tensions with Pakistan?
Yeah, I think again, too fast, too soon, they've gone up. And now if you see, the price action is getting exhausted. So you won't miss out much. What gains have been made. But it's like June of last year when we started warning that the valuations have gone too high. So what I would suggest, it remains a go-to sector, yes. Valuations are not allowing you to enter right now. What I would say, suppose you have 100 rupees to invest in that, break it up into 6 portions, and every 2 months you start allocating. So allocate over the next 12 to 18 months. Right now, I don't see that sector running away. We have seen this as a global trend. European defense sector is up 120% in 1 year. And all the big companies now, UK yesterday said they will spend $12 billion on nuclear warheads, and they're going to order 18 more submarines. So we saw the makers of submarines in UK just going through the roof. It's a global trend where the world is rearming for an eventual conflict. So from Korea to Europe to US to India, even the Chinese defense players, all are doing very well. So you won't go wrong in this, but you could have 2-3 months of sideways to declining market. So I would say wait for the decline, or if you are too much afraid that you will miss any further rally, then break the money up into 6 to 12 portions and invest on a consistent basis rather than trying to time it, because right now it's priced to perfection. The next 4-5 years is priced into the prices. Then, as you said, it becomes an execution issue and continued growth. Growth will come, exports will come. So all that, we are a very big part of the global bazaar now, and still we have a low share. So technologically, we have reached good levels in the global bazaar, and we will get those orders. So growth will come, but at what price is the main thing. I think we are back to those June levels, so little bit careful on the defense.
Okay, caution, that's the word when it comes to defense, because stocks are priced to perfection for the next 3 to 4 years. That's the word from Ajay. With that, Ajay, always a pleasure chatting with you to get your perspective, to understand all these matters in such a simple way. It's good for the viewers as well. So always looking forward to our conversations, and I hope we will have one sometime soon as well. The next one sometime soon, so to say.
Sure. Thank you very much for having me. Thank you.
Thank you.
Okay.
Thank you. Well, then we've come to the end of the show now. Of course, it's a 130 point up move on the index, 24,750. That's where we are at. So going good as of now. Let's see if this continues throughout the day as well. Advance decline ratio also looking fairly strong at almost 3:1 on the NSE. Well, with that, I'll take your leave. Thanks a lot for tuning in. But don't forget to tune in around 12:25 or so to Moneycontrol, because we will be getting you expectations on the RBI policy. Remember, the outcome is tomorrow at 10 a.m. So in the run up to that, we'll tell you what really you should be expecting. We'll get you expert views. We'll also be touching base with Lata Venkatesh of CNBC TV 18 and get you her thoughts on what the RBI will do this time around. And of course, tomorrow we'll have a elaborate coverage with a battery of experts where we will be analyzing the RBI's rate decision and the way forward as well. So yes, lots lined up, lots of action on Moneycontrol. Stay with us and have a great day ahead. Thank you.